Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. In this video I would like to talk about a very interesting opportunity as it's forming right now. This is the dollar versus the Canadian. So what do we have currently? The pair is, I start from the higher time frame and I go to lower time frame to show all the things as they develop and what would I be paying attention to in order to look to trade this one. So the first thing we can spot here is that the pair is still in the zone of the triple cycle from the weekly time frame, ending up with this kind of resistance, which something that could remind a possible double top. Now, according to triple cycles, the idea is to get a corrective cycle. Corrective cycle means we can get two waves to the downside, or that can play within any sort of a range. This is the idea as we have it, and the pair according to triple cycles should aim towards the 50% as long as the last stop holds. So currently the last stop does hold, so yeah, we were exposed to some kind of a rally here, but this rally is slowing down. You can spot the angle, right? It started very impulsive and then slowing down. Now, the second thing which we have to pay attention to when we go to lower time frames, like in that case the daily, we see here that was an attempt for a first false breakout, which did not deliver much as the pair was ranging for a while. This is why you did not hear me talking about it in my live trading rooms in Traders Academy Club and in my weekly forecast, because it was basically doing nothing for a while. And now, basically previous week, we got the rally, the beautiful rally with direct relation to the oil drop in prices. But look what happens right now on this pair. We got the second false breakout, right? Second fake breakout right here, followed by bearish divergence, as you can spot them on the MACD. So we have it from the weekly going down to daily, showing all the signs of the turnaround, right? Now the second thing we have here, the third thing we have here is a movement directly from one band to another band on the Bollingers. Ideal sign would be after that is a break of this low. Now if it happens, it will be simply perfection. But even if not, the current things we have here are enough from the perspective on the longer view to see some bearish correction coming. Now on the 4-hour chart we also got these waves, triple descending cycle, right? And we got the trend line breaking and the pairs start to create lower lows. Now right now we have Bollinger Bands duplication area, right? So once again, by ideal we should see that being cleaned, right? And then some corrections and sells. Now, will that be cleaned or not? Time will judge. What we definitely have to pay attention to is the first leg. Look at the let me go back to the 4-hour chart once again. This is one straight leg currently, right? So once it will make the corrections, we should be looking for the possible sells. Now, if this is one leg from the 4-hour chart, on a 1-hour chart, this should be a cycle by itself. Now the way it forms right here is basically a beautiful triple cycle. Now there is a bullish divergence forming here. This thing is expected to slow down right at that area, right? And once again, ideally after cleaning here, but we can't know will the market or not do that. From this area we would expect corrective cycle. Corrective cycle could be in any of the two options. Option number one is two waves. That would be again ideal scenario. Option number two is it will make some sort of a range here, maybe triangle or any channel, anything in terms of patterns, and from there the breakout. So the bottom line here is right now it forms first leg from the 4-hour chart to provide deeper correction. Very likely we should be looking for retraces and the sell opportunities to form there. So drop the Fibonacci as the retraces begin It could, if it from here, of course, then this is the place where you measure the Fibonacci retraces. If it goes slightly lower, you just expand the Fibonacci, and then the levels would be right here. This is the place where you do want to see the retrace happen towards the right and start to form the bearish evidence and provide you with sell opportunities. So this is a very interesting opportunity. Will the market provide it or not? Time will judge. One thing to pay attention to is what I call randomness. What does randomness mean? If we get straight lag going through all the Fibonacci retraces in one shot without making the two waves correction or any ranging correction, this is a warning sign. It does not mean that the down move would not be able to happen, but this will be definitely a warning sign, because if the corrections happen in a developing trend, you want it to be according to respected levels. If it doesn't do that, then it's an immediate bulb to show you cautious signs. So this is my plan with the dollar Canadian and the way I'm looking to trade it, and that's pretty much it. I hope you enjoyed the video, and I invite you to my live trading rooms to enjoy many more of the setups as we discuss them on live daily basis. So thank you for your time. I'm Vladimir Ribakov, Traders Academy Club, and I'll see you soon. Ciao for now.